recording is up and running. Let me just open the chat so I can answer any questions anybody may have. Hey, 39.6, so almost at 39,700. We're going to hit that 40,000 before Monday finish. 50,000 would be real cool. I don't know if I could do that though, but again, I still have time after that to put out some more content, do some more lives, multiple choice. Sure. Okay, cool. So I'm gonna just take my rule. Chanel, Shona, Lily, vibes. Everybody. Hold on. Yeah. Yeah, that's everybody so far. Okay. Okay, sorry. So I was watching TikTok this morning and I saw one of the other POV tutors. He put out his predictions, right? Yeah. But here the predictions, right? So it's either control accounts, bank recs, or errors, right? That's one possible question. Partnerships, companies, or cooperatives, cash book or petty cash, journals or double entry, or a combination like last year, manufacturing, and possibly budgets and cash projections. Except the only thing here covers stock valuation and payroll.
I would be very happy with this.
Right? And he also, Jean, yeah, they were on YouTube. Yeah, he also didn't say income statements and balance sheet with adjustments or like T accounts. He didn't say like provision for bad debts, provision for depreciation. So there are several topics he didn't call, but I just felt like he was covering all the bases, but I kind of understood what he was doing. It was like when in the pandemic they were giving out the broad topics, like well, they basically write the whole syllabus there. What are they talking about? But anyhow, but I'll have to check just now. I'm just starting Anissa. Hey, morning, Anissa. How you doing? Good to have you on. Hello, Samad. How you doing? Yeah. Tomorrow is payroll, employees pay. So like net pay, gross pay, deductions, that kind of thing. Monday's ratios. Yeah. They said if I start at 1 o'clock for some people who do have Spanish, or if I'm just gonna start 4. I feel I might just start 4 to be honest. I'll send up. Yeah, English in the morning. Yeah, 9 to well, half 11, 11:45, and then you break for lunch. And quite a few people say they are Spanish. But I'll send so could I do over errors, Kiara? Sorry, Kiara, I can't do over anything right now. But you could go on the YouTube live and check it out. The live still up. When I did errors Thursday. Yeah, we did errors Thursday. So that's like 3 days ago. Right, 2 days ago. So yeah. I don't know the formulas, there's a comment on it. But the commentary at the O level is not much. It's kind of bogus, to be honest. Right. Okay, cool. So we leave that for now. All right, so folks, oh yeah, and here, I mean, I have lots of tutorials on errors from scratch there as well. It might be better to go through those tutorials first and then tackle the crash course stuff. But up to you. I know time is of the essence, and you might not have time to go through all the tutorials, but you know, that's just my suggestion. All right, so I'm gonna just format my sheet here. Not this. No. All right, cool. Right. Right. All right. Okay. Shanice, good morning. How you doing? Right, folks, I already followed it. So if you could just watch your screen, I'd be grateful. All right. So I'm not printing out any past paper stuff just yet because I want to do some like preliminary examples first. Actually, I think I might put back the column and headings. All right. Okay. So just before we jump into any kind of working on numbers, let's just get the brain warm a little bit, right? So basic context. Why do we start a business? To make a profit. Profit has a simple calculation: revenue earned minus expenses incurred. How do we earn revenue? We have to do either provide a G or an S. What is that? A good or a service, right? Now, because we are dealing with stock valuation or inventory valuation, we're obviously going to be talking about goods or stock, right? So we're not going to be considering services today. So we have to buy and resell goods. Now, we did manufacturing not too long ago. So we know that we could not just buy goods, we could make goods to sell as well. But again, for the purposes of what we're doing here, we're going to focus on buying finished goods. Now, this could also apply to raw materials when you're doing manufacturing. But for now, we will just focus on finished goods. So we're going to be buying finished goods and selling them to make a profit, right? Let's take a real simple example, right? Let's say you bought a box of pens, right? So, or just say you bought one pen, and the amount of money you paid for it was $10. And somebody say, "Hey, I really like that pen. How much you want for it?" And they say, "Okay, give me $25 for it now." And they're like, "Okay." So here's my question: how much profit did you make there? $15. How did you find that? Selling price minus cost price. The difference between how much money you earned by selling the pen and how much money you incurred or spent by purchasing the pen, right? So the profit is the difference between the selling price, and the cost price. Not the selling price in itself, Christopher. Huh? Right, cool. Selling price minus cost price, right? Now, regardless of how many numbers you see today, what kind of tables, always keep this basic logic at heart. We are always trying to, and then the accounting principle that governs this simple calculation, right, is called the matching principle. The matching principle says something very simple. It says to calculate profit in accounting, you have to match two things: the revenue you earn from selling the good or the service and the expenses you incurred by selling the good or the service. Which is the same thing. You have to match the selling price with the cost price, right? So hold on. So this was example one, right? Wait. Right, okay. Now, I want you to imagine we have an example two, right? Oh. So we bought one pen, right? Buy one pen. Good. Now, in this one, we're going to buy 2 pens, all right? So the cost price will remain the same. So cost price per pen is the same $10, right? So here's my question: how much money would we have spent in total to buy 2 pens? 20. Good. So Jean, in the exam, we should have scientific or non-scientific. For PoA, it don't matter. Either one is fine. Whatever you could use effectively, right? So the total expenditure was equal to $20, right? Now let's say you sold 1 pen. If you sold 1 pen at the same selling price at $25, how much money you made? Sorry, wait, hold on, just now. I had to change my numbers, my bad. Let's say you bought 3 pens, right? Sorry, so the total expenditure would be 30, not so? If we sold 1 pen at $25, same question: did we make a profit or a loss? All right, cool. Right, so this is where people get chained up, right? So they say, look, but so you put out $30 and you make back 25. So clearly you only make 25, you put out 30, so you have a deficit of 5. And I say, well, you could think about it like that way, but you'd be wrong. And they're like, what? I'm like, okay, check it, right? How many pens we bought? 3. How many we sold? 1. What are the next 2? Did they disappear into the ether? Do we still have them? Could we sell them? We could. Okay, so if you buy 3 pens and you sell 1, how many you have left? 2. That's your closing stock. Not so? Right. So your closing stock, what would the value be? It's 2 pens at $10 each. That's the cost, right? 2 by 10 is how much? 20. All right, cool. So we have the value of closing stock here. We have the value of sales. This technically is the value of purchases, right? So check it. We could do this calculation of profit very easily. How many pens we sold? 1. Was the selling price? 25. Was the cost price? 10. So if your cost price is 10, your selling price is 25. What's the profit? 15. Right? You sold 1 pen. You can only make a profit on what you have sold. You cannot make a profit, or a loss for that matter, on what you have not yet sold, provided you could still sell it. If you lost the 2 pens, you can't sell them anymore. So clearly you have to write it off as a loss, right? You spend your money, you lost, okay, hard luck. You had to go and buy them back, so you lost your money. But if you still have the pens in your possession and you are able to sell them, you could possibly earn money to cover the cost price, right? So what we have to match, and this, like I was saying, the matching principle says that to calculate profit, you have to match two things: the revenue you earn from selling your good or the service with the cost of providing that good or that service. Even though we bought 3 pens at a cost of 10 each, we only sold 1. The cost to get that pen was $10, not 30. Yes, you had to buy, yes, you bought 3 pens, yes, you physically spent $30, but the number of pens you sold was only 1. So only 1 of those pens went up for sale. So you can only match your revenue of 1 pen with the cost of 1 pen. Are we okay with that? Right. So that's the matching principle in action, right? Now, and then, like I said, so this is a simple thing here, right? So this is selling price here, this is your cost price, this is your profit, right? We know that there's a thing called the income statement, and there's a trading section that has a cost of goods sold calculation, right? So you have your sales minus your cost of goods sold or cost of sales, and that gives us the gross profit, right? Gross profit. Cool. Now, in this particular case here, what would the sales have been? The sales revenue. It would have been the 25, right? Okay, cool. The cost of goods sold, the cost of sales would have been 10, not so? Because you only sold 1 pen, and the cost price of that pen was $10. And the profit, therefore, is equal to 15, right? So this here is like a mini trading section for an income statement, right? But of course, yeah, sales minus cost of goods sold is gross profit. That's the top half of it. The trading section, the profit from trading, from providing a good or service, right? We know we have a slightly more elaborate calculation for cost of goods sold, right? What's the slightly more elaborate calculation? Normally we have, so sales minus cost of goods sold, and the cost of goods sold is normally what? The opening stock plus the purchases minus the closing stock, right? Okay, so check it. The sales value here was 25, right? Right. Now, the question gave us no opening stock, so we could assume 0, not so? Purchases is the total value of purchases, which is how much? $30, right? Cool. So we purchased, the dollar value attached to the total purchases is 30, right? Now we know we didn't sell all. How many pens we have left? We sold 1 out of 3, so we have 2 left, right? The cost per pen was 10. 2 by 10 is 20, right? Right. So all we have to do is say, okay, opening stock plus purchases minus closing stock. Look at that. How much is that? 10. And 25 minus 10 is equal to 15. So this here is the cost of goods sold, and this here is your gross profit. Right? Yeah. So this way is the income statement methodology, and the other way to do it is, like I said, it's a simple mathematical relationship, right? So even though they show you this big format and all that kind of stuff, we can break it down simply. And when you understand things from the fundamentals, you can then dress it up and present it in different ways. Because it wouldn't matter how you prettify it or how you complicate it. It's a simple concept at heart for all of accounting, I promise you. Right? It had some comments on that same TikTok video, F accounts and this don't make any sense, all kind of thing. I'm like, well, clearly I had a bad relationship with it because it's not that bad. But I could understand what they might have gone through, right? Well, I think that's true for any subject. A good teacher and you have sufficient time. Okay. Accounts? Yeah, no. I understand. It's a kind of specialized thing. Okay, cool. So, what does this have to do with stock valuation? Well, we are going to want to do trading sections like this to find gross profit, right? Of course, it's going to look a little prettier than this, right? And what's going to happen is we are actually going to dig a bit deeper into the purchases. What do I mean by that? Are we going to be writing invoices? No. What we're going to be doing is we're going to be tracking the purchases and sales over a time frame, usually a month, right? So we're going to, or maybe even a year. And there are going to be multiple purchases. And what's going to happen is that the cost price is usually going to increase over time. So what we need to be able to do is to track which costs went out to be able to properly calculate cost of goods sold, right? Now it sounds a little complicated, but I promise you it's not that bad. You structure that they give you, that complicated looking sheet, can cause a bit of confusion. It can, right? So what we're going to do first is we're going to do a bit of a, I guess you call it like a rough draft, like a simplified version. And then after we understand it from a simple perspective, then we're going to complicate it a little bit more. When I say complicate, we're going to put it in like a kind of proper structure based on what they want, what they usually want. All right. Okay, so what I wanted to do here was just simply get you all, maybe not introduced, but refreshed with the concept of how to calculate gross profit by matching sales and the cost of sales. So that's what I wanted to do on this page, right? On the next page, now what we're going to do, we're going to take a look at when we have multiple purchases happening, right, over time. Okay, let's go from there. So Google Meet, if you guys are good with the example on this page, as in just the fundamental concept, let's give me a quick Genie chart now, please, on that, right? If you need me to re-explain, give me an R, it's not a problem, right? Like I said, all I wanted to do on this page, right, was just kind of remind you how to calculate gross profit, right? And to show you that cost of goods sold could be ascertained in different ways, right? If we have these figures here, opening stock, purchases, and the closing stock, we could do a simple calculation. Opening plus purchases minus closing, right? If, however, we know exactly which unit we sold and how much it cost, and that's actually the crux of the matter, guys. If we knew how many units we sold and the price of the units, we could just do a simple multiplication, right? If we bought 10 units at $10, it's 100. If out of the 10 we sold 7, well, the cost price or the total cost price of all 7 would be what? 7 by 10 is 70, right? So it could be a simple multiplication. All right, vivid plus. I actually know a lot about. Well, I'm glad to hear that. All right, I'm glad the content was helpful to you, and I hope you're still doing good work. All right, okay, cool. So let me get next page going. All right, so set 1. Right, so I'm gonna have to zoom in here a little bit. 8. All right, so hold on. So outflow. All right, purchases. This needs to really. So do I do 10 now? Okay, maybe I can do 12. Yeah, I'll do 20. 20 looks good. 20 looks good. Okay, cool. Let's center align these and move them. Right, and what I'll do as well, I guess I could put a bit of a tape. Oops, I did it again, didn't I? I did. Wait, hold on. Sorry. W. There you go. Right. Yeah. Sorry, I was just trying to put some borders. Right, and maybe I could actually hold on. Take out that and let's widen. Let's increase the height on these. Right. Let's do a 30. Yeah. Okay. Let's take off the headers there. Let's zoom out a little bit. I think 240 might be a little too much. We don't have to have 240. Okay. Right. Okay. So, folks, let's take a look at what I have on the screen. So, what I have on the screen here is a simplified version of what they call these stock control, the inventory tracking form. All we're going to do with this form is we are going to keep a track of how many units come in, how many go out, and how many are left. All right. So we're going to start real easy, right? Not because I don't think you can handle the hard stuff, but I don't want to start hard and then have to backtrack, right? Because it happens, right? I rather you'll understand from a simple perspective. Like I said, if you understand the simple and the basics, we could build on top of that. Right. So let's say on the 1st of May, right? 1st of May. Oops, sorry. I'll do that, right? Oh, okay, hold on. My bad. Right. So 1st of May, right? So on the 1st of May, we bought how many units? Boy, let's say we bought 10 units at a cost of let's say $20 each, right? Cool. Right. Okay, maybe I have to widen this in a little bit. Let's widen it a little bit more. So we are 20. Let's do 30. Can we do 30? Okay, well 30 wouldn't fit, so we're gonna have to zoom out a little bit. We are 220, so we could zoom out a little bit, man. I think that right. Can you guys see that clearly online? Yeah, that looks okay to me. It looks okay then. Okay, my head blocking some stuff on some parts, but we'll see if we can fix that, right? And what we're gonna do, we're also gonna see if we can increase that about 16, huh? No, then that defeats the whole purpose. All right. So no. So let's do 12. 12. Okay, cool. That's a little better. Yeah, 12. All right. So here's my value. Here's my question. If we buy 10 units at 20 each, what's the total value of the purchases? 200, right? Cool. Now at the end of first of May, what we have in terms of stock, how many batches we have? We have one batch, right? How many units in that batch? 10. And what's the value of each one? 20. The value which is 20, and the total value is 200, right? So you know what? I'm just going to copy and pull this across here, right? Okay, cool. All right. So again, all we're doing is we're just tracking how many units come in, how many go out, and how many are left at the end of every day. All right. Let's say on the 2nd of May, right? I buy 12 more units, right? At same $20 each. So how do I find the value of the purchases? I'm multiplying, right? 12 by 20 is 240. Right. Now, at the end of May the 2nd, I have how many batches in total now? I have two different batches, right? The batch from the first, batch from the second. But here's my question. What was the cost per unit in the first batch? 20. In the second batch, how many? It was the same 20. So in total now, how many units do I have? 22. I have 10 that I bought on the first and 12 that I bought on the second. 10 plus 12 is 22. So if I wanted to put a summary of my stock here, I'll put how much? 22 units at a cost of 20 each, right? Okay, cool. That's correct. 440. Very good. Okay. Right. Now, let's complicate it. Are we okay with that so far? Right. Let's complicate it slightly. Let's say on the 3rd of May. Oh, sorry. I'm missing a letter here. Not in a good place. Where is it capped? No cap, right? Now, let's say I buy 15 units. Well, let's say today the price was $25 each. Let's change it to 16. I like 16 or 18, boy. Maybe do 18. That's fine. Okay. So I bought 18 units at 25, right? So that's going to give me, any guesses? If it was 16, how many 25s do I need to make 100? 4. Yeah. So multiplying by 25 is the same as multiplying by 100 and dividing by 4, right? So if I take 18, 18 is not a multiple of 4, right? But 16 is. So 18 is 16 plus 2, agreed? So 16, if I take 16 and multiply it by 100 over 4, 4 cancel with 16 how many times? 4 times. 4 by 100 is 4. I still have 2 more units at 25. 2 by 25 is? Correct. So 450. Now, when I go to put my summary of how many units are left, yeah, let's keep pushing. Very good. Yeah, if I go to give my summary here now, can I just add the 18 to the 22 and get 40 units? That is it. The cost price of these first 2 batches, the unit cost price was $20. On the third now, I have a different unit cost price. So I can't just lump all of these into one batch. Now, there is a method called the weighted average cost that allows you to do that. But from a that's the last method that I think, but didn't Nyla say that was what you understand? So why should I hit it then? She had next lessons? Oh Lord, all right. Well, I guess she had to watch the replay. So Nyla is, well, hopefully watching the replay and learning, right? So what we have to do if we have batches of stock that have different unit cost price is we simply list them separately, right? We're just going to pull back this one here, 22 at 20, and we could pull this one here, right? And what we could do is we could still give a summary of the total number of units and the total cost. So 18 plus 22 will give us 40 units, and total cost is, we just add 440 and 450, right? So total cost would be 890. And what we'll do, we'll bold that and grade it out. So we can see that looks a bit more like a total now as opposed to just the next line. It's not one yet, right? So actually somebody on the chat now asked, so is this FIFO and LIFO? Yes, this is the precursor to it. Yes. So we do in stock valuation, but stock, the LIFO, FIFO thing only comes into play when you sell stock. You could buy stock whole day, whole year, right? If you never sell it, FIFO and LIFO not gonna matter, right? It only FIFO and LIFO are what we call, stock valuation approaches. Another phrase. It's not cost tracking. Is something that it'll come to me, right? So we have these different methods that we use in different scenarios, and I'll tell you what those scenarios could be, right? Mm-hmm. And AVCO, weighted average, yeah. Right, okay, check it. So you see how we have 40 units at a total cost of $890, but these 40 units are comprised of two different batches, right? If we wanted to kind of lump them together, all we do is take the 890 and divide by 40 to get a per unit cost. That's it. So what we would say we'd have 40. So well, it's what we call the weighted average value. So we know we bought two batches and each batch had a different unit cost, right? But if we wanted to lump it together and stay like a single unit cost for everything, we use the average cost, the weighted average cost, right? So 890 divided by 40 as 22.5. So yeah, so if we had to do it, right? If we did it, we would say 40 units at 22.50 each. Right now, I'm just showing this for now in passing. We're not actually doing weighted average first, right? Actually, why not? No, I just saying, right? If that is an approach, right? So the weighted average could be used here if you wanted to basically compress this into one line. You'd have to find a weighted average cost, right? And it's an average, so you take a total dollar value, and divide by total number of units, right? That's how you find the average cost per unit, total value divided by total number of units. But we're not doing that one right now. Right? Okay. So what I wanted you to glean from this particular page is if we are tracking units, right, coming in, if we have units that have the same unit cost, right, we could lump them together, right? Normally I don't, but you could in this case, because it wouldn't matter if you lump them together or not, because they're the same cost, right? Anytime you have a batch coming in with a different unit cost, then you can't lump it together just so. You could do that with weighted average, but we'll come to that after lunch. But usually the approach is we show them separately, right? And yes, you could still show the total number of units and the total cost, right? That's perfectly fine, right? So, like I said, this page, the purpose of this page was just to show you or introduce that concept that stock is coming in, and if it come in at different costs, and if it does come in at different costs, we need to show the different batches and show a total. Are we okay with that? All right, cool. All right, Google Meet, if you guys are good with that, just kindly give me a quick G in the chat, please and thanks. Right, if you need me to re-explain anything, it's not a problem, right? And yet we are doing stock valuation methods, LIFO, FIFO, and AVCO, but I'm building up to it because what I'm doing here is, like I said, trying to show you the basics behind the stock valuation worksheet or whatever you want to call it, the stock tracker sheet, because that's where people have trouble, right? But if you could understand it from a basic perspective, as in its function and how it works, right? We could then start to do things a little more in line with how things would look. But how it looks doesn't matter. But again, it's like trying to teach the income statement with just the format. There's the format. Like I remember when I learned income statement, the teacher wrote the format on the board, full blue, right? Sales, minus returns in, is net sales, all that, the whole thing. What you gotta do? Write it down and learn it. All right, cool. Now, I didn't mind because when I was younger, I was very big into video games. Like, you all know, like Mortal Kombat and Street Fighter. And right. So they had like multiple characters. I used to learn all of the moves for everyone, which was quite a lot. And then write them out on papers and sell them to people, right? So I was big into memorization, just how my brain kind of operated at that point in time. So learning off stuff wasn't a problem for me, but not everybody is me. Nor should everybody be me, right? Everybody have their own ways and methods of doing stuff, which is perfectly fine. That's part of the beauty of life. It have diversity. All right. Anyhow, okay. So with that, now I'm going to go to the second page, and we are going to introduce an instance where we have a sale, right? Because here we didn't have any stock going out; we only had stock coming in, so we just kind of kept stacking up different batches of inventory. So what happens when we actually have a sale? All right. Okay. So what I'm going to do? Let me just take out some of this stuff. Okay, so I'm gonna take out. Hold on. Okay, I know. Okay, yeah, because I kind of wanted to fit on one page. I was thinking this is a 180 and it's still visible. It's pretty visible. Okay, all right. I know what I'm gonna do. I'm just going to zoom out to about 150, which is still pretty visible, and I'm just going to. Nope, that's not what to do. Sorry. Just add a couple of lines, right? So I think it should still right. Okay, cool. So on the 4th of May, okay, that's tomorrow, right? On the 4th of May, we're gonna have a sale, all right? And that sale will be, let's say 30 units, right? Now, for the purpose of the stock valuation worksheet, we don't actually need to know the selling price, right? If we have it, good. If we don't have it, it's not actually a problem, right? And let's say we sold those 30 units at give me a cost. What I want? 100? IV value? 100? All right, cool. How much? Yeah, 100 per unit, right? 100 each. So 30 by 100 is equal to $3,000, right? Okay, cool. So check this, right? If we had 40 units and we sold 30, how many we have left? 10. Okay. Here's my question. Are those 10 from the first batch or the second batch? That's the question is, okay, it could be the first batch, it could be the second, it could be a combination of both. How we know depends on the stock, is what we call the cost flow assumption. That's what I was looking for, the cost flow assumption we are using. So we have 3 cost flow assumptions, right? Venetia, hey, that's quite kind of you. Thanks very much. I appreciate it, right? Do I have a video in general journal? Yes and no. You can check out my error correction videos. That's general journal mainly. Yeah, sorry. So the stock flow assumption or the cost flow assumption, we have 3. We have first in, first out, which we call FIFO, right? Yeah, so first in, first out is FIFO. We have last in, first out, which is LIFO, and then we have one called weighted average, which I kind of did just now when I divided the 890 by the 40. Cooperative, I did it already, Sean. Huh? Weighted average, yeah. So we instead of saying weighted average, we just say AVCO because it kind of it has a better ring, LIFO, FIFO, AVCO, as opposed to FIFO, LIFO, weighted average. You know. Yeah, Sean, I did cooperatives already, so you can check my channel and see the live still up. All right. Okay. Yeah, guys. Sorry. Right. So we have 3 cost flow assumptions. So the question is, which one are we using? So what we're going to do, I'm going to illustrate each one at a time, just to give you an overall idea about how it looks. And then you're going to get some questions based on each one, right? One at a time. Then there's still Liam. Good morning. Morning, Liam. How you doing? Good to have you on. Right? We're doing some stock valuation today. I was just going through some preliminary examples and explanation. So you haven't missed too much. Yeah, man. No worries. Update what? Yeah. Well, the interesting part with that is that when I did it in 2020 with my class, we were now online because of the pandemic. I did the first session and they were confused. So that when I did it over with the colors, they understood it better. So that's why, right? So obviously, what worked for somebody back in 2020 mightn't work for somebody now. It mightn't work for somebody the same year. So that's why it's important to find different methods to explain, right? They cut out the paper too, and they just did SB and multiple choice. Yeah. Chino, do I have vision on cooperative? I have possible questions. I haven't gotten a chance to do like a tutorial, but it's very, very similar to the limited companies, so the appropriation account and dividends. So if you know how to do limited companies, you kind of technically know how to do cooperatives already. All right, sorry guys, give me one second. I'm gonna check the outside. Oh, yeah, I didn't put anything into it. But when I put it on, right. No, you don't. Well, that's on my channel too. But it's for me. Well, thank you very much. I have an envelope. Find an envelope to put this in. Sorry, guys, just give me 1 second. Put this in an envelope. Right. Just put it anywhere. Right.
last one.
All right. All right. Okay, so let me just recap for Liam and Talia as they now jump in the dance there. Mark them present. Right. All right. And just a reminder for tomorrow, we do have a 10 to 12, right? We have a 1 to 3 and a 4 to 6, right? Okay. Right. So I want this up here. Yeah. I mean, if you all want, we could cut the mid-afternoon break to half an hour and start back and then finish like 5:30 if you all prefer. Right? Yeah. Okay. So, all right. So hold on. 1 sec. What did I again? Did I do a thing? Yeah, I did. Okay, go. Right. All right. So just for the benefit of Liam and Talia, I'm just going to do a brief recap. So, okay, thanks. Yeah. Right. So what we're doing, Liam and Talia, is you'll notice, what you call it? Hold on. This. Take out that. 1 second. This. Right. If you're wondering why I'm not deleting the whole thing, I'll show you why. Right. Okay. So what we have on the screen here, for those who came in late, right, is we have a table here that's going to help us track the stock coming in and the stock going out and how much we have left, right? The stock going in is obviously going to go into the purchases column, right? Sometimes the question paper will tell you instead of purchases, they'll put acquisitions or inflows, but they mean the same thing, right? And instead of sales, they'll tell you disbursements or outflows. And like, why we can't just put purchases and sales? Anyhow, whatever, right? So that's the structure. We have a date to tell you when it happened, purchases for any purchases we make, sales for any sales, and the balance is what we have left at the end of the day. All right? Okay. All right. So check now. So on the 1st of May, we purchased 10 units at 20 each. If you multiply 10 by 20, the total value is 200, right? Now, on that same day, we had no sales. So at the end of the day, we will be left with that same single batch. We okay with that? All right, cool. Now, the next day, we buy a next 12 units at the same $12 each, right? So in total now, if we bought 10 units at 20 on the 1st, and we buy a next 12 at 20 on the 2nd, the total number of units is now what? 22 at the same cost of 20. So at the end of the day, the balance will now say 22 units at 20 each. Hear that? Correct. Yeah. And we are only able to do that because the cost price in each batch was the same. So if we do a situation on the 3rd here now, where we buy a next batch, but look at the cost. What's the cost? It's 25. Is it the same as the before? No. So when we come to the last column now, we can't just lump it together. We have to show the batch at 20 first, and then the batch at 25 separate. And then what we have to do after that, we'll show our next line saying the total number of units and the total value. But obviously, they won't have a cost they could share in the middle there, like how we'll multiply, right? There's actually one of the methods we're going to do allows us to do that, but we'll get there. But what we're showing you again, I didn't do a method yet, right? All we're doing is looking at how the sheet functions. Things come in, and we put the balance in the last column, right? So I was now getting to which method, right? So on the 4th of May now, we make a sale. Now we're selling 30 units at 100, right? So if we're making $3,000, 30 by 100 is 3,000, right? So here the question I asked the class. Prior to the 4th, we had 40 units, right? If we sell 30, how many we have left? 10 units. But here's my question. Are those 10 units each valued at 20? Are they each valued at 25? Or is it some combination, some at 20 and some at 25? Now, it was a rhetorical question because the correct answer is it depends on what stock valuation method or what cost flow assumption we are using. We have 3 cost flow assumptions, right? We have FIFO, which is first in, first out. We have LIFO, which is last in, first out. And we have AVCO, which is actually interesting, weighted average. All right. So these 3 cost flow assumptions are what you need to know. Ratio. That's correct. Ratio is 10. Yeah, that's correct. Yeah, that's correct. All right. Shan, what do you think are the topic predictions for this year? People keep asking me, so I think what I'll do, Shan, is give me a little time and I'll do a little. Bali. Yeah. Hey, Shimo, how you doing? Morning. Yeah. But if you look at what he called, he basically called the whole syllabus, except for income statements, balance sheets, and like depreciation. But he basically called the whole syllabus. So I'm like, okay. But I understand how we did it, because if you look at what came, is basically from those broad topics. But again, it's basically the whole syllabus. So that's why I'm always hesitant to make predictions, because then people go say, well, you say didn't come. I'm like, yeah. If you have to predict the lotto numbers, I probably have a better chance of doing that. You know? Anyhow, right. So, there's your morning, right? We just doing some basic stock valuation here. So we didn't pick a method yet, right? So all I was showing here on this table was that when you make purchases, right, they go in this column, and then when you keep purchasing, you have to keep showing your batches to the end. So the last column here is the batches, right? The first two batches had the same cost of 20, right? So you can actually lump them together. So if you buy 10 at 20 and then buy 12 at 20, it's the same thing as buying 22 at 20, right? On the third day, we bought 18 at 25. Now, 25 and 20 aren't the same value. So we can't just add 18 and 22 and get 40, because we wouldn't have a common value, right? So what we have to do is we have to show the batches separately. So the 22 at 20, right? And then the 18 at 25. And like I said, you can show the total number of units you have and the total value. You just can't show like a value per unit, although under the weighted average you could, but we'll get that out, right? Right, so now this is where it comes into play. If we have 40 units and we sell 30, we have 10 left, right? So 10 units are left, but at what cost? Right, is it 10 at 20? Is it 10 at 25? And the answer is it depends. On what? It depends on what stock cost flow assumption you're using, right? So let me pull this across here. Right, so this is FIFO, right? If we use the first in, first out method, right? So first in, first out means that the stock that came in first will be sold first. In other words, you'll sell in the same order as which they came in, all right? So which batch came in first, the batch at 25 or the batch at 20? Now I know we have two batches at 20, but we'll lump them together for the sake of simplicity, right? So what that means is that we're going to sell from this batch first, right? Now tell me something, how many units in that batch? 22. How many are we selling? 30. So will this first batch fully satisfy the sale of 30? No, we still have 8 more left to sell. But if you're selling 30 and this first batch only has 22, you had to pull 8 from somewhere else. We only have one other place to pull it from, which is the batch of what? The batch of 18 and 25. When you pull 8 out of that batch, how many you have left? 10. So what you have left is 10 units at 25 each, and 10 by 25 will give us 250, right? So that's how FIFO works, right? The other way you could think about it is if in FIFO you're selling from the first batch, so you can literally think about it like you're selling from the top go down, right? If you're selling from the top go down, whatever's on top disappears first as you go down, which means whatever is left will be from the bottom go up, right? So think about it. If under FIFO we're selling from the top go down, we know that this going first, so we only have 10 units left. So the 10 units left have to come from the bottom go up. Now this last batch here has 18 units, so that could fully encompass the whole 10 units. So the other way to do it is to start from the bottom and go up, right? But you have to know what you're doing to do that. Yeah. The 100 is just something I made up. That's just the selling price. That have nothing to do with the price of the in China. It have nothing to do with the cost or which batch you pull from. All right. Okay, Google Meet. If you guys are good with this specifically, let's give me a quick Genie chat, please, and thanks. If you need me to re-explain, it's not a problem. Give me a R. All right. All right. Now I'm going to do some more examples. So don't frighten. I don't expect you to understand perfectly from one example. That's not a thing, right? But I am going to show LIFO, and then I'm going to show AVCO, just like I said, just to show you how each one looks. And then we're going to go into and do some more detailed questions based on FIFO LIFO after. All right. Sorry. Okay. Right. Now, first in, first out is used in situations where the things you need to sell are kind of uniform. So, like for example, if we're selling envelopes, right? We're selling envelopes. Has there been any significant progress in envelope technology recently? Not really. And I mean, you could have some with Windows, like the clear thing you could, so you can see the address there, etc. Oh, cool. But more or less, an envelope is an envelope, right? So let me say I buy a batch of envelopes last year and I forget to sell it, and I buy a fresh batch this year, and if you put the two boxes next to each other, you can't tell the difference, right? Would it matter which batch I pull from the cell? No. Okay. So in situations where the products are basically identical and they don't really change much over time, or if it is you have organic things, for example, food stuff, right? Anybody ever went somewhere and they happen to see in the back where they say we operate on a FIFO rotation? Anybody saw that? No. Okay. But saying, would you rather, when you go to buy your doubles, eat from the older china pot or the fresh new one? The fresh new one, right? Sorry, that's a bad example. That's actually LIFO. Anyway, sorry. You rather have the fresh food, right? So first in, first out. You rather eat what come out, right? As opposed to having it sit down and wait, right? Anyhow. Right. Now, if we think about things that progress, like iPhones and technology, right? If I buy a box of iPhones last year, I used to buy the 16 last year, and the 17s come out, and I buy the same exact box with the same quantity, and I put them next to each other. Clearly, there's a difference, right? So in situations like that, where your business will probably thrive by offering the latest, more modern, more popular items, you probably want to sell those last items first. Now, don't get me wrong, you still want to sell all the iPhones you buy last year. You don't want stock on your hand that you pay for and you can't sell because then you're just losing money. You want to sell everything, right? But if, like anymore, they have two kiosks next to each other, and the kiosk next to you get the 17. Well, everybody go and go there. So you want to get the 17 and sell it, not so? Right. So in certain situations, you want to use FIFO. In certain ones, you want to use LIFO. The weighted average one is also one where things kind of stay the same and don't change that much in terms of the quality of the item, right? Or to me, actually, even though there's an extra piece of calculation to it, to me, it actually simplifies the working later on. And I'll show you what I mean, right? Uh-huh. Exactly, right. So technically that's LIFO because that was the one that just come in, right? So for food, right? For food, you rather have the stuff that just get made because it's fresher, right? Unless of course you had bad experience where the food was too hot and you burn your mouth and right? Okay, fine, no problem, right? So anyhow, but right. So under first in, first out, FIFO, we sell the earliest batches, we stock the units from those batches first, right? So what's going to be left in closing stock will be the later batches, right? Okay. Now, what I want to show you here, actually, I want to take this out and put it somewhere else. Crap, I was supposed to put it at the top. Okay, I'm gonna put it here. Oh, all right, hold on. So this, I'm gonna shift that down. Shift it down again. Right, we're gonna take this and put it here. Go from there. This one, no, I'll do the blue. First in, first out, right? Okay. Now the last row in each of these columns is actually very useful because what it does is it allows us to add up all of the values above, all of the dollar values, and it gives us the total, right? Sorry, at least for the first, the purchases and sales. For the balance, well, that actually is whatever it is. But let me explain. If you want total purchases, how many times or batches did we purchase in the month? 3, right? On the first, the second, the third. So in the first instance, we paid 200, and the second we paid 240, and the final we paid 450, right? So if we want a total purchases, right, all we have to do is add up 200 plus 240 plus 450. That's 440. That's 890, right? So 890 is total purchases, right? Cool. Total sales, but we only have one sales, right? Okay, cool. What's the value of that sale? And here, what will go here is not a total. It'll simply be the balance, right? Which will be the closing stock. And that will simply be whatever this last line is here, right? So in this case, we have a total balance of 250. So closing stock equals that. Total sales equals that. And total purchases. Cool. All right. In class, people, are we okay with the table on the screen? What it shows, how we got the figures. Do you have any questions as to any of the figures, anything? Hey, morning, Mara. How are you doing? Morning, Mr. Miru. Uh-huh. Yeah. Right. So first thing we bought a batch of 10 or 20. Second, we buy a batch of 12 or 20. So we actually combine these two batches together to get like a single batch of 22, right? The third, we bought a third batch, 18 or 25. So that we had to show these two separately because they had different unit costs, right? And then we just said that the summary of the quantity and value of our stock was that, right? Now, on the fourth thing, we sold 30 units. And when you sell 30 from 40, you have 10 left. Because we're using FIFO, it means that the earlier batches get in used first. First in, first out. So what is left is literally from the last batch. So we only have 10 units left, and it has to come from this batch. So you only really have one line, right? Now, there are instances where, let's say you might have 3 or 4 batches of stock of different values, and you might sell like a small quantity, and you might still have 4 batches left. Or you might sell a large quantity and have 2 batches left or 1 batch. So it depends, right? Sometimes they might have only batch units from 1 batch. Sometimes they might have some multiple batches. But it depends on the question. All right? Okay. All right. Google Meet. Just give me a quick Genie chat if you're good with this table on the screen. Phantom, let's try manufacturing accounts, income statements for sole trader and cash book. Mr. Mir that does daily everything. Yeah. Yeah, we get the hashtag with hashtag Chrissy Poo. Somehow we're gonna change the at page, somehow we're gonna change the POO to POA. I don't know. Chrissy Poo for POA. I don't know. Okay, so again, what I want to do here now is I want to show you what this will look like on the LIFO. Okay, cool. Right. So under LIFO, this is going to be what we call last in, first out, right? So the last in, first out method of inventory valuation, or the last in, first out cost flow assumption, it basically gets rid of the units that came in last first. Hence, we say last in, first out, right? Now, again, we want to do this when we want to have more recent items that came in being sold first, right? So check it. The information is the same as in the previous question, with the only difference being that we're using the LIFO cost flow assumption. So when we now have our 3 sets of purchases and we have our technically 2 batches of stock, right? So you have your 40 units and we sell 30. Now, when you have 40 units and they sell 30, how many you have left? Same 10 units, right? So that part doesn't change. What changes is which batch, from which batch the 10 units will be from, right? Now, if you're selling from last in, first out, you're selling from the last batch go up, right? So you're selling in the reverse order. So under FIFO, we sold from the first batch, then the second batch, then the third. Under LIFO, we're going to sell from the third batch first, then the second batch, then the first batch, right? Correct. So this whole batch is going to go first, because if we're selling 30 units, clearly the whole batch of 18 is going to go, right? And then we have 12 more to sell, which will obviously come from this first batch here. Not so? So when you sell 12 from 22, you're going to have 10 left, right? Now, you could do it that way, which is perfectly fine, and which I suggest you familiarize yourself with. The other way you could do it is to do a kind of reverse approach. if you're selling from the last batch first, what's going to be left is going to end up from the first set of batches, right? Now, in this case, we only have two batches. There's batch A and batch B, right? So if in LIFO you're selling from batch B first, what's going to be left will have to be from batch A, depending on the quantity, right? For example, if we sold 3 units, right? Obviously, you're going to have 37 left, right? Now, that 3 will come from this batch here. So you'll have 15 left from this, and this first batch is left untouched, right? So it's quite possible you can have all of your different batches left, but different quantities, right? But let's stick with 30 for now, right? If we sell 30 units out of 40, that means you're going to have 10 units left. On the LIFO, this last batch that came in is the first batch to go. Now, that only has 18 units, and we need to sell 30. So obviously, we have to pull 12 more, the remainder from the next batch up, right? When you sell 12 from there, you're going to have 10 units. 10 units at how much? 20 each, right? And that's going to give us 200. Not 20, boy, 200, right? So, the only thing that's going to change here will be the closing stock, which should be 200, right? So, under LIFO, so question, do you teach POB? No, I don't. Right. I could, but it's just me barking my Trozo drive for like 2 hours at a time. I could. I mean, I would love to get back into it and get into the content, but it don't have enough numbers for me to be happy. I need numbers to be happy, honestly. All right. So will this live be on YouTube? Yes, it will. It's already there, technically speaking. Right. Donnelly, thanks for the follow. I appreciate it. Okay, cool. Right. So in class, people, are we okay with the thing on the screen for the LIFO? Okay, Google Meet. You know the drill. If you guys are good with that, give me a quick G in the chat, please answer. All right, cool. Of course, if you have any questions, please feel free to ask. Yeah, not a problem. Right? Yeah, guys. So we'll go to a little past 12 since we started about 10:15. Yeah. Bob. No, the 440 was the total value of the 22 units. Each of these units had a value of 20. So when you multiply 22 by 20, you get 440. Yeah, it's the per unit cost. Yeah? Anyone in jail, how you doing? Okay, right. So what I'm going to do now is show you how weighted average would look. And then we're going to dig into some actual questions, right? AVCO 1, right? So AVCO is the weighted average. Green. Okay. Okay, folks. So watch my screen here. So the information is the same in terms of the 3 purchases and the 1 sale, right? So at the end, before we make the sale, we have 40 units at a total cost of $890, correct? Now remember I said because there were different unit costs for the batches, we couldn't really put like a single unit cost to summarize all 40. Under weighted average, that's exactly what we do. But the question is, how do we get that value? Well, it's an average. So if we're looking for an average cost per unit, we take the total cost of all the units and divide by the total number of units. So if the total cost is $890, and that's for 40, right? To find the cost per unit, we'll simply divide. You'll take your $890, you'll take your 40, and you'll divide. Right, but so that would work if in the batches they had the same number of units. But what happens usually is in the batches they have different quantities. So for example, if the batch of 20 was 500 units and the batch of 25 was 10, you have more at 20 than at 25. So we call it weighted average because whatever has more has a bigger weight, a literal weight or a metaphorical weight. So that's why it's called the weighted average. So you're weighted more on the side that has more. All right. Sorry, Noah, you had a question? It is. Yeah. 20 and 25 is 45. Half of 45 is 2250. It's close. That's correct. Yeah. Because if you look, it's 22 at an 18, right? So That's pretty close to it. So 22.25. Right? So this is the weighted average method. Right? So again, let me just recap what we do, right? So as you can see, the first three lines up to this point here was exactly the same between all three methods, right? In the first two methods, FIFO and LIFO, everything was the same until we make a sale. Under weighted average, right? Now the only reason I didn't do the calculation here is because the value. So this is where it comes into play, right? So you see how you have 10 at 20 and 12 at 20, right? Are these numbers different? No. So therefore, you don't have any recalculation to do. You just add the 10 and the 12, right? Anytime you have a different unit cost, that's where the calculation comes into play, right? So in this case, we had 22 at 20, which was 440. Then we had 18 at 25, which was 450. So we had a total of 40 units with a total valuation of 890. So we could do a simple average cost by dividing the total cost by the total number of units to get what we call the weighted average cost per unit. So now, when you sell your 30 units out of your 40, guess what? We don't have to figure out what batch it's coming from. It always saying, okay, we had 40 at $22.25 each. You sell 30, guess how much I left? 10 units at $22.25 each. And that'll give us 222.50. Right, so like I was saying, under the weighted average, we have a little extra working to do, but it takes all the complication of having to figure out, well, what batch should I sell from and what batch I have left, right? So you kind of, I guess you can say you front load the working as opposed to trying to figure out what batches come from, right? So that's an overview of the three batches. Just format term. Well, you can say that, but not really, but I understand where you come from, right? Phantom. Right? A format is just simply a presentation of a concept. So it's really the concept you have to learn. The presentations could differ, but I mean, I understand where you come from. That's how I did it. So yeah, after becoming a teacher, I better understand the concept. Anyhow, right. In class, people, are we okay with the weighted average method here? Right? So again, everything up to this point was the same. When we got here, we still had 40 units at 890 in total. We just took the total value of the 40 units and divided it and got a per unit cost, right? So now when you sell 30 units, we don't have to worry, hey, is it left from the first batch? Is it left from the second? Is it some combination? No, it don't matter because we have one batch. 40 at 22.25, you pull 30 from that, you have 10 left. Long story short. All right. Google Meets. If you guys are, Cara was like, yeah, she's good. All right, thank you very much, Cara. Appreciate it. Sienna, Ariana, lovely. All right. And again, if anybody needs a recap, it's not a problem. Let me know if I pull different figures, which we will be doing. We will be going into some of the questions now. Right? So yeah, we'll go to about 12:15. Because I have to get home to pay the babysitter and bring Shiloh back here, provide him appearance here for 1. If not, we will start back late. But if we do start back late, we will finish late if you all could stay. Right? I don't want to rob you of your time. Right? Yo. You go upstairs? Yeah, I have water upstairs. Actually, I should bring my case. I can't walk with that case and Shiloh. That is just craziness. Yeah. Carnival, I think I'll walk with Shiloh and Marley to come across here. And at least slip on some more sun. Yeah, but anyhow, I catch myself, thankfully. Okay, cool. All right, so ladies and gents, what we want to do. What's that? I told her, yeah. She just watch my heart. Like that's my turn, no? I like it's mine too. Like to remind me when she pushed them out. Like, I know I was there. Yeah. I was in cringe. I was all up there. I was helping all kind of thing. Doctor like, sir, calm down. Are you sure? Anyhow. Yeah. All right, so folks, we have. Let me just give you a little breakdown on the past people, right? So 2000. So in Jan we have 2007, then 14, then 17, then 22, then 25. So it's like a well, apart from the 2007, 2004, it's like a 3-year skip. 14 plus 3 is 17, plus 5 is 22, plus 3 is so it's really only like 4 or 5 questions here, right? In the May papers, 2003, 2007, 2010, 2011. So again, it was a kind of 3-year skip. Then they gave me 2011, and they are bringing back since then. So 14 years Well, 13 is in between. They bring but please recap with the different figures. I'm gonna do that here. Yeah, I am going to do it. Right. I just want to give a little breakdown of what coming, right? Now, I don't know that we can get through all of the questions, right? Sorry? Today, right? It's 11:13, like I said. We have 45 minutes left in the first half and then 2 hours again. We can make some headway, right? But what I want to do remember, we have 3 methods to do: FIFO, LIFO, AVCO, and we also have to do an income statement, right? So this could easily take today and piece of tomorrow. Yeah. Right. Okay. So let me show you. Right. Actually, as we mentioned, let me talk about it one time. Right. So sorry, I forgot to put this here. Sorry, 222. Right. So remember how I talked on this page about like a simple income statement like this? Right. We could do that if we have the information. But most times what we have is this. Right. Let me show you. So for the FIFO, right? So for the income statement, what we need? We need sales. Do we have, okay, so we might have opening stock, purchases, and closing stock. Okay, cool. So do we have sales? We have sales, right? Now, in this question, there was no opening stock, so I'm going to show you how that would look if we had, right? I'll show you what they give you, right? Purchases. Do we have purchases? 890. Look at that. And do we have closing stock? 250. So you pull this across here. That's your cost of goods sold. And you say, okay, 3,000 minus the 640. With my head blocking, sorry. Right? And then that's your gross profit. Of course, when you draw it up, it'll look a little better than this, right? But that's it, right? So you see, we didn't have to go hunting and pecking. We had the summary figure here for sales, for purchases, and closing stock. So all we had to do was plug and play. It just had to remember is sales minus cost of goods sold, which is opening stock plus purchases minus closing stock. They'll tell you. They don't give you a choice. They say using the FIFO method of stock valuation or using the LIFO method of blah blah blah. And then they might ask you, if you had used the weighted average instead, what would have been the value of closing stock? Right. So here, even if this had to leak over into piece of tomorrow, we could technically do that because we still have one question from yesterday we had to do, the cash projections question. I want to do that one. Right. Worst case scenario, push that to Monday. Right. How many of you already have Spanish on Monday? 1, 2. That's it? Vanessa Casino. Okay, cool. All right. So here what we'll do. Balance sheets and payroll. And what to come? Hold on. Balance sheets, payroll, and receipts and payments to come. That might actually, you never know. That sounds like some. What went on there? Sorry. Not that I know of, no. Gina. Okay, cool. What did you there?
No, he doesn't. Oh, no, sorry. Well, Javi does.
One of them.
Oh.
Yeah. But like I said, what I'll do is in the chat, I will send out a poll and see if who doesn't do Spanish and if they want to come from one. All right, cool. Monday. You would have done 2 exams in that day, so I know that'll be a strain for all of you, right? Plus, the next day is the PoA exam, and then math starts in one time, right? So like I said, we're trying to not burn out. I mean, I know I put like 4 sessions a day, 2 days in a row.
I find PoA is way more taxing than math.
Okay.
That's fine.
All right.
I'm not stressing out. Accounts, if I had accounts after,
Yeah.
like Monday, I would.
Okay. All right. Okay, I hear you. All right. Okay, yeah. So you could do a quick, simple income statement like that. Under the LIFO method, again, same thing, right? Now the purchases was the same with 890, but the closing stock here was different. So that would change the cost of goods sold and of course the gross profit, and then the same thing for the weighted average. Right. So what you're noticing is that under each of these methods, the only thing that really is changing is the closing stock and cost of goods sold. Right. So the closing stock here is minus 222.5. Right. Yes, I know that this one. What do you think is the topic prediction for this year? Boy, everybody asks me that, boy. Teddy, what I'll do, Teddy, is I'll put up an Instagram and a TikTok story, right? Right now we working on some stock valuation here. Hoping it hasn't come in 14 years on the May paper. It came in where it came in. It came in Jan already for the year, right? Now usually what comes in Jan, no, right. I had to be careful how I say that. Right, I would love to open that PDF, not PDF, the Excel file and show it. We could compare. We could compare it, yeah. Right. But again, up to now, we have open a possible question for this topic yet, and we should, right? It the papers are of similar difficulty levels. Occasionally, there may be on one paper some slightly more difficult question than the other, but it will never always be only January. Sometimes the May paper is very taxing compared to the January. Sometimes. Well, yeah, you didn't do the May paper yet, so I don't know how you could say that. Don't worry, Tuesday we'll find out, right? All right, cool. Okay, so folks, but so just to kind of point out something here, right? What's the gross profit here under FIFO? 2360, right? On the LIFO, it was 2310. So it was less. Not by much, but it was less. On the AVCO, it was kind of in the middle, right? Now, this is what happens when you have rising prices. So you had 20, then 20, then 25. When prices go up, what happens is that on the LIFO, on the FIFO, you end up selling the cheaper items first. So your cost of goods sold, the cost of what you actually sell, comes from the cheaper items. So your cost of sales will be lower on the LIFO. Why? Because on the LIFO, if you are selling from the last batch first, and the later batches are the more expensive ones, it means you're literally selling more expensive items. So the cost of what you are selling is more expensive than the FIFO. So that's a question they ask relatively often with these stock valuation questions. Yeah, they say in periods of rising prices, which one gives a bigger profit, which one gives a lower profit. As a matter of fact, there's a law, I'm not sure in what country, I think it's the States, I don't know if it's UK, a law that says accountants cannot use LIFO to value stock for reporting purposes. Because if you use LIFO, you end up with a lower gross profit, which ends up with a lower net profit, which is a lower tax to pay. And guess what? Government don't want to have what lower tax. Right. What topics I didn't come in? I'm not sure, to be honest, but like I say, I'll see if I can do a little story. Not really, no. Oh, that's an interesting. But I never thought about it that way. Oh, I mean, more realistic for the type of asset. Okay. For the type of asset, I agree. Yeah. Okay, so folks, like I said, that was a bit of the intro, and like I said, I wanted to do that because I don't like to just jump into the now certain questions, yes, but I don't like to just jump into this topic because this topic will be a little issue followed, right? How to do it? I can't remember the format table that you had. Well, Nika, are you talking about the stock valuation or what topic are you talking about? Oh, right, okay. Right, so here we're going to do. In the interest of making sure we cover the questions, I'm going to just take a look and see how it came in January, because I know there was one of the years it come kind of stupid. Okay, I think this might be a nice question to start with. Would it? Hold on. Let me open our next one and see what it look like. Let's see Jan 2022, boy. Oh, this was a stupid one. But it's not stupid because we only have two. Okay, we will start with this one. And there's only one page, so that's brilliant. So 1, 2, 3, 4, 5, 6, 7. So I'll do 8 copies in case anybody come just after. So 8 copies. Let's go. Right. Right, and of course, my online, my Google Meet people, you will have the documents already there. So this is the 2022 one. Of course, I'll leave it on the screen for us to see. All right. And I'll show you how to kind of fill in this thing here. Right. So this, like I said, I didn't like this particular format or layout because it kind of cuts off the third column. Now, I know I didn't show you guys multiple columns in any of them. Good. Yeah, I will read my paper there for you. It's just from yesterday? What were we yesterday? Budgets. All right. Yeah. No. Okay. Yeah. Okay, folks. Keelan, a layout like this come from more can you throw me up? Yeah, boy, Keelan. Yeah. So we just hold on. Yeah, even this one kind of strange. Cost in, the cost out, unsold, calculation of average cost and value. Okay, this is the keep. It technically could be, but it's more CSEC focused. So yeah, Kara, talk to me. What's up? Fillable form. Hey, that's a good thing to do. Jonathan. Oh, Jonathan. Yeah, I understand that, Jonathan. I understand people want well, let me show you, right? Yeah, you Jonathan. But right now we're doing some just practice because we don't know. The honest truth, Jonathan, is that I have looked at. I have an Excel file. 1 second. This is people asking, right? Now, just I'm not pulling this up to do any predictions. I just want to show you, right? Real quick. I have an Excel file where I have collected all of the topics on the papers from 2025. Go back this January, right? As you can see, as far back as 2007. So we're talking about 18, 19 years worth of topics, right? For me, right, I have from 2024, me go back to about 2002. Yeah. I believe us. And if it's not, then let me know. I'll send it, right? Okay. Yeah. Yeah, guys. So what I did was I converted this thing into a PDF. I fed it into Chat GPT, and I put the prediction up on Instagram page, right? Well, let me open I don't want to open ChatGPT on the screen. Let me hold on. Let me put that to do this stock valuation comparative CSEC past paper questions. Yeah, that's that one there, right? They're going through Jan 20 last night. They bring one set of off-brand topics. They did. And Jan 2025 cash book. The way they brought this was kind of dumb. Employees pay. Yeah, I don't like how they do this kind of mishmash of different topics. Depreciation, manufacturing. Okay, stock valuation, and an error correction and suspense. Yeah. So yeah, okay. I hear what you're saying, Jonathan. All right, hold on. I sent your prediction and told us to do that. What my prediction? Oh, you mean from Instagram? Um, that's the wrong thing. Crash course flyer. Where's that? Finding previous suggestions, content creation. Um, she's teaching my videos. Oh, okay, that's interesting. Well, I guess I mean actually some teachers have reached out and told me that they do that. Yeah. So I mean I can't get vexed per se. But I mean everybody needs to have their own style. They can't just rely on what I do. But I guess maybe to save some time because I understand time is a thing. Yeah, guys, I can't find this these suggestions. I don't know where they're going, but here look, I'm gonna put up the question that we're doing on the screen. Let me get back. Let me get back to the prediction stuff, right? Okay, so and somebody asked for a fillable format. So yeah, just now, let me open a couple more of the actual questions to show you guys something, right? Because yeah, they bring in versions of the stock valuation sheet that are different than usual, but I haven't seen a usual one. Oh, here's Amani. All right, hey Amani, good morning. How you doing? Good to have you on. Okay, this one here is a slightly more conventional one. So you'll have like remember how I had purchases, sales, and balance, right? So all they did was instead of having like one line to put like how I put this number of units at this cost equal to this, so you just have a space for each of those pieces of information, right? So here's what I'll do. Inventory out is sales. That's correct, right? Just now, let me see if I could crop this and use this as the fillable format. Let me just get that. Hey, give yourself. Come this way, right? Nah. No want it. Right, cool. That's my baby boy. All right. Forms. Form typo. Right, let me see. Man Bali make a good prediction in those. Yeah, but Jonathan, if you listen to what he says, practically the whole syllabus. I listened to this morning. He didn't mention income statements or balance sheets with adjustments, nor the individual adjustments. But everything else he practically called. So, I mean, if you was a betting person and you bet based on what you say, like something out of those, 5 out of those, you're almost guaranteed that. All right, okay, cool. That's closing stock. Inventory until it's closing stock. Just now, I'm not seeing the question. Let me just put this. Right, so no, not an absorption costing. Right now, again, there's no offense to Mr. Bali. I'm not trying to downgrade what you do. Right, he did it like he said based on looking at the past papers. Right, I am hesitant to do so, but maybe I'll change my mind. Okay, so yeah, fillable. Fillable form. Right, so we can thank CSEC for what they are. Grace before meals, yes? Okay. Hold on. So online people, just give me a second. Let me just put up a screen. Sorry, hold on. Hardest thing that will come in favor between PoA. No, that's a big question, boy. Best way for the POMA. The POMA, what is also PoA? Israel constant practice. Here, statement of financial position with capital reserves. Yeah, that's limited company balance sheets. You can check. I have a video upon that. Yeah, sorry, just give me a minute. I want to send this fillable format to my class online. Just that WhatsApp taking a little time to open. So sorry, just give me a second. Oh, you're already testing screen. Live stream will begin shortly. But just me. Good. Nah. We torture people. A fresh look for WhatsApp web. Thank you. Yes. Groups. Okay, cool. Where I put it? Stock valuation fillable form. All right, cool. And I'll send it to my class as well. Right. The only thing is, like we saw just now, it kind of comes differently. Right? Let me put back up the screen. All right. Okay, so let's pull up the question. So this to me is the usual method that they bring for you, the usual sheet, sorry, right? And again, it very much parallels what I did down here with purchases. I actually put date first, purchases second, sales third, and balance. And under each of these columns, they have three sub columns, right? I didn't do these sub columns, so like I have 10 at 20. Because to me, it's a little easy to do that. I mean, don't get me wrong, I'll still probably do up these 9 or 10 columns. It's not a problem. All right. Or I could keep it like this if you like that way, right? Now, again, whatever format they give you, so let me state it, right? I have asked a question of a teacher who I know who has marked CSEC and CAPE accounts for years. And I asked them, I said, look, if the kids get a format and they don't know how to use it, but they know how to do it in a different format. Can they just not use the format given and do it on the other sheet, the spare sheets? He's like, yes, they can, right? So if you don't like the format in front of you, you do not have to use it, right? Same thing. If they give you a balance sheet format or income statement format or appropriation account with 2 columns, and you like 3 columns, draw in a 3rd column. If you give you 3 columns, you don't like 3 columns, just use 2. If you like 1 column, use 1, right? Just be careful to not do that for every single question because you mightn't have enough paper to do so, right? So try your best to use what they give you. But in a crunch, if you have the space and the time, do what you could do, right? A lot of times people fixate on formats and wondering what format they're going to bring. The format is not the important thing. It's the underlying concept and what you're trying to show. The format is a visual manifestation of the concept. Now, don't get me wrong, formats can be helpful. They provide a structure and people thrive with them. So nothing is wrong with them per se. I'm not saying that. But what I'm saying is when you start to, as Gary Vee says, over-index on learning and memorizing formats, and then something comes a little different and it don't fit your format, and you find yourself confused AF, right? So that's why I say, try to understand the underlying concept and how it could be presented. Like, for example, in the partnership appropriation, I was taught after you do the net income plus the interest on drawings, you do the interest on capital first. I've been seeing salaries first. Does it make a difference? You know, but for arithmetic wise, no. Same thing in the appropriation account for limited companies. I had stopped adding the retained earnings brought forward before I did my appropriations. I added it after. My logic was that I want to show that I can make appropriations out of the current year's profit to show that I was profitable or not in the current year. And I didn't have to rely on previous year's profits to facilitate my appropriations, right? But whether or not you add it at the start or at the end, you get the same final answer, right? So there's no one right way to show most, if not all things in PoA. Even T accounts. You don't have to use a T account. You can use something called a running balance account, right? That's what I actually use for my cash book because at the end of every transaction, you have a balance automatically, right? Anyhow, I'm going off on a tangent there. Let me go back to the people that work. All right. So what are we doing first? We're doing 2022 January 1st, right? Let me just pull this down a little bit. Right, so G&B Retail Limited sells a popular electronic device for toddlers called WePad. Sorry, the following information is available for about the item for the month of December 2021. Okay, so why I'm gonna start with this question is because they give us just 2 inflows and an outflow. I like that, right? They don't have an opening stock. We'll do some with opening stock, don't worry. And they say FIFO, right? FIFO is usually the method most people learn first, so they tend to gravitate towards it. Like for example, you're doing maths. You know simultaneous equations. Most of them like elimination because you learn that first. And most of them don't like substitution because you learn that second. And some people did the reverse. Some people were taught substitution first, and they prefer that to elimination. Right? And some people don't like either of them, right? Why people? Oh, the matrix version for solving simultaneous equations is like training yourself to stir your tea using your nose. Yeah. It's a nice trick. It looks stupid, but it's getting the job done. And there have other easier ways to do it, as far as I'm concerned. But it have a purpose. Anyhow, right? Not that I want to decry matrices. I just like, we need to rethink how we do things. Anyhow, that's a whole different conversation, right? Okay, so what I want to do, I want to give you guys a few minutes. Hold on, you'll try it already? You ready? Or yeah, minute or two. Oh, okay, cool. Sorry. Yeah. I was over talking. All right, cool. So J22. Right, so this is the Jan 2022 question. What boy? Question me, I know. All right, but FIFO. Right, and just for practice, actually, because I'm watching the time. So like I said, we'll go to about 12:15. So with this same question, we'll probably do the 3 different methods. Yeah. So FIFO was blue, LIFO was yellow, and AVCO was the green. Okay, cool. All right, FIFO. Okay, so let's clear out some of this information, shall we? Right. Now, the method that they gave us said the format, right? So you put your number of units and your cost price. So they didn't give you a space to put the total value, right? So let's just see how that looks, right? So the date, so hold on. Oh, no, just all right, so all right, cool. So it's 2021. Okay, so the 1st of December. Okay, so sorry, so what we have 60 at 20, right? So what you would do is you'd put 60 under the cost price. Hold on, you want me to recreate this stuff here, or you all okay with the same purchases and sales? Recreate, okay, to give it a bit more of a more realistic feel, right? Okay, one sec. Right, okay, that. So this. Oh no, it was only 2. It wasn't the third one. Small thing. This one I'll do this. Right, okay, cool. What is the width? 10? Okay, cool. Let's do that. Lovely. Yeah, and I'll call it sales instead. No, they want inventory out. They want what? They want kind of strip in this. All right, cool. And then unsold inventory. All right. So then all right. So inventory in. Inventory out. Unsold inventory and value of inventory. So they have number of units, cost price, and value. Okay. Okay. Are we okay with how it looks now? Right. So I just didn't put VPAD inventory card. We have inventory in, inventory out, unsold, value of, number of units, cost price under 3 and then a dollar comment. Okay, cool. Right. So what we need is we need the information to populate it now, right? Okay, cool. Can you do AVCO? I will be doing AVCO, say less if I'm maybe doing an example in about 15 minutes or so, but definitely after lunch, like in the 1 to 3, we're doing more questions, some of which will include AVCO. All right. Okay, so on the 1st of December, what we have happening? 60 at 20. We have 6. That's not what I wanted. Okay. Okay. What? Wait a sec. Cool. Okay. Oh, we have some other stuff down here. Let's get rid of it. Okay. Let's actually center align everything. This looks a little better. Okay, cool. All right. So we okay so far? So 60 at 20. Okay, cool. Inventory. So anything out on that day? Nothing. Okay. So the unsold inventory is 60 at 20, right? And the value would be equal to 60 multiplied by 20, which is 1200. I multiply number of units by this. Basically, what they did with this last piece here was what I would normally have in this last column here, right? Yeah. So instead of having it like in one cell, they just separate in 3. Yeah, that's why I say this confuse people, right? If they could just have a standard format, that would help. But again, it kind of goes against what I was saying. That you should be flexible to use different formats. But yeah, let's start with 1. We don't start. It's like if they're teaching you. Actually, no, I was going to say teaching you letters. They teach you all 26. They kind of do. Vanilla is in the alphabet. But then this come up to each one at a time. Anyhow, sorry. Right, on the 15th of December, okay, are we buying or selling on the 15th? Inventory received, so that's in, right? So how many units? 40. What's the price? 22. Okay, cool. Right, now the unsold inventory, you're going to have two batches. You're going to have your first batch of 60 at 20. You're going to have your second batch of 40 at 22, which gives us a value of 880. Huh? Yeah. You could, if you could fit it, you could put 60 at 20, 40 at 22. You could. I'm just putting it because I can't. Uh-huh. Yeah. Uh-huh. Hold on, okay. Which particular column are you talking about? The value or the unsold or what? Right. So under the unsold, you have two. You have number of units and cost price, right? So here I have the first batch that I bought on the first. Here the second batch. So oh. Right. Okay. Yeah. So what you would do is you put your 60 and your 20 here, and then your 40 and 22 here. So you'd have to put both items in the same cell. Yeah. Yeah. Hold on. No, we're not done because we have the sale to do. Right? Because we sell 75 units, right? Okay, cool. So on the 19th now, maybe I might need some more. Right. Yeah, all right, thank you. Right, so on the what? The 19th, so 19th of December. All right, so we sold. So under inventory out, hold on, let me see if I could just give me 1 second. Huh? They put 29? They did. Look at that. So typo again. So if they tell you, so to be honest, it's not actually critical because it doesn't affect anything calculation-wise. So we could love it, right? But I would have probably go with the 19th here. What bugging me is how they have like the 2021 center line, and clearly these figures here are also aligned, but like the December is only in one thing. It just visually it's just not appealing to me, but that's just a stupid nitpick, right? All right, so they're selling 75 at 60, right? 75 at 60. Okay, cool. So here it is. If you're actually at, you mean like, oh, in your, yeah, you know, you have to put it in the arm. So basically, yeah, you'd have to kind of align it. I'll come and show you this now, right? Right, so how many units we have in total? Right. No, but hold on, before the sale. Sorry, yeah, before the sale, how much we had? We had 100 units in total, right? Now you're selling 75. What method are we using? FIFO. Okay, so actually, let me head up, right? That's not what I wanted to do. Okay. Right. So if we had 100 available and we sold 75, how many we have left? We have 25 left. Cool. So here's my question. Is that 25 coming from the batch at 20 or the batch at 25? Oh, yeah, FIFO. Right. Sorry, batch at 22. Sorry, I said 25. Right. So under FIFO, we selling from the first batch first. This first batch has how many units? 60. So that whole batch going to get sell out because we're selling 75. And after you sell the 60, you still have how many left to sell? 15. And that could only come from one batch, the very next batch. When you sell 15 from here, you're going to have 25 left at 22. That's going to give us a value of 550. Right. So after we bought two batches, we had a total number of units of 100, valued at 2,080. The sale, right, we sold 75 units out of 100, right, which means right away we have 25 units left. That's so? Okay, cool. Now, if you have 25 units left, the question is from which batch or what value are these 25 going to have? Are they all going to have 20? Are they all going to have 22? Do we have to find an average cost? And the answer to that question is it depends on what valuation method or what stock flow, what cost flow assumption we are using. All right. YTC, we did manufacturing week before, actually. Actually, earlier in like January. It's still live on my YouTube. And I'll answer that question on Instagram and TikTok later today. All right. Right. So 75. And so it's selling 75 at 6. Now, under FIFO, we sell from the first batch first and then go down the line to continue selling, right? So the first batch was 60 units at $20 each. Now, if you're selling 75 and you only have 60 in this batch, obviously we're not going to have enough to fulfill the whole quantity of sales. So we're going to have to pull the remainder, which is 15 units, from the next batch. 15 from 40 will leave us with 25. All right. Or again, if you could wrap your mind around the reversal concept, under FIFO, we're selling from the top go down, which means what is left will be from the bottom go up. So we know if we have 25 units left, it has to come from the last batch first. All right. But again, that could be a bit confusing for some people. So if it giving you problems, don't worry. Oh, I wonder which mic is for thing, boy. Yeah, Lauchi, I'm gonna talk about the topics a bit later today. Right now, I'm trying to get my stock valuation the class going because I started a bit late. So we'll deviate to that a bit later. Okay, in class, people, are we okay with what's on the screen? Any questions? Anybody? Anything? We okay? All right. Okay. Google Meet. If you guys are good with that, just kind of give me a quick G in the chat, please and thanks. Of course, if you have any questions, please feel free to let me know. R, right. Okay, cool. All right, so just for the sake of illustration, what I want to do is actually I'm going to copy the same whole page. And what I want to do here is just show you what it would look like if it was LIFO instead, right? Okay, so, nope. Right, so check it. If it was LIFO or last in, first out, what does that mean? It means that we're going to sell from the last batch first and then go up, right? So you don't have to write over the whole thing. All I want you to write is this last piece here. You'll have 25 units, but what value would each unit have, right? Under LIFO. So again, it's just practice, right? It's just, you don't have to write over the whole thing. I strongly suggest you don't write over the whole thing, right? But just under LIFO, if it's last in, first out. So we have 100 units comprised of two batches, one of 60 at $20 each, one at 40 units at $22 each, right? We sold 75 out of the 100. Under LIFO, we would actually sell from this batch and go up, right? So the question is, we know if we had 100 units and we sold 75, we'd have 25 units left. So which of these two values would they have? 20, that's correct. Uh-huh. No. All I'm doing is just for the sake of illustration. I'm not asking you to do it over. All I was asking is if it was LIFO instead, which value would these 25 units of closing stock have? The 20. That's all I'm asking. Right? And for weighted average, right? Right. So check it. So for weighted average. Wait, no, it's green. Sorry, my bad. Uh-huh. Right. But under LIFO, the last batch in is the first batch out. So if under LIFO, you're selling from this batch first, right? So this batch only had 40 units. We're selling 75. So this whole batch going to get consumed. So we still had to pull 35 more from the first batch. If you have 60 units, then you pull 35, you have 25 left. And the value would be 20. Right. Sorry, one second. No, sorry. Right. Yeah, so under weighted average or AVCO, what we would do is one little extra piece of calculation here. To find the value, the average, weighted average cost per unit, you take a total value of inventory and divide by the total number of units. So what would happen is you would get $20.80. So now when you sell 75, you don't have to worry which batch you're pulling from. We basically lumped them together and created a weighted average cost. We use that item. Sorry. Why is the cost price 60? Oh, sorry, it should have been selling price, my bad. But that's what the question gave us. Skeleton. Understand what you're saying? Because that's not the cost price we see, but it's inventory out. So I assume they meant selling price, which could be an incorrect assumption on my part. It could be. Right. Okay. Right. Yeah. So Marcus, what I showed here is I showed the LIFO, right, and version of this question, and I showed the AVCO, right. So under weighted average, what we would do is after you have a 60 and 40 is 100, and you add the value to get 20, you divide the total cost by the number of units and get the average, the weighted average cost per unit. So now when you want to find out, well, what value does my 25 units have? I'm just going to pull this. I wouldn't have to worry about batches, right? Okay. Right now, it wasn't something you had to do over. It was just me showing you what would happen if it was a different method, right? Okay. All right, folks. So here's what's going to happen, right? So we're going to take a little break for lunch there. Actually, hold on. Let me just check one of the other questions. So we just did the Jan 2022, right? Okay, right. Mahalal Jack. And then who's this now? This is, okay, right. That's 2017. Give me a second. Let me just pull up a question or two just to double check something here. It's Jan, right? Right. So that was 2017 to 20. Let me see 2014. If 2014 short, I'll consider doing 2014 now. Okay, no. All right. Okay. So we'll put a pin in it there for now, ladies and gents, right? Let me check the May papers now. May 2011, May 2010. Then stock. We have a cartel V. Cartel V, boy. And oh, it's a nice one. Mukram, boy. Yo. I don't think so. Sally Walker. I know this one. Okay. All right. So here what? We're gonna have to break for lunch now. When we resume after lunch, I feel I'll start with the 2014 Jan, then 2011 May, and then we will hit 2017 and 2025 Jan. Yeah, sure. All right. So Google Meet, I'm gonna log off there for now. I'll try to start back 12:45, 12:50, but it depends on what time parents come home because they're watching my son for me. As I do have a babysitter for him for the afternoon, right? So if I'm not back by 1, whatever time we start, we will go for 2 hours. If you all could go past the 3 o'clock time, right? Right. So I'll log enough now. I'll see you all in a bit. Right. So look out for the So you all can just stay in the chat, or you can log back on at 12:45, 12:50. Right. But I'll try and send like the back signal out when I come back. Right. Later. Okay. YouTube out for about 40-45 minutes. So